Hi guys, and welcome to this market update on Bitcoin. I'm doing this update a little bit differently to the previous ones. I'm using my stream charts in order to explain my current thoughts. I think this is a much better way to explain my thoughts, actually, because you can track the developments live on stream. So you understand my charts better, and you can follow the happenings in the market live on stream, and you know what to look for because I did the market update based on these charts. So yeah, let's start right away. First of all, you see on my first chart here, this is the dynamic support and resistance chart based on the cloudy indicator. It's one of my indicators. And as you can see, it shows us areas of support and resistance, and this is dynamic support and resistance. It is very characteristic for cloudy, for this indicator, to show us when, with strong moves, when a trading range, a dynamic trading range is broken. Like in this case, we had this very sharp drop from 57 to 45K, this very sharp drop, and it broke our trading range here. The move pierced through the green support clouds. And this is a sign that we are entering a major downtrend, or not a major downtrend, but we are entering a downtrend, and price has to find a bottom somewhere in order to establish a new dynamic trading range. And as you can see, it took quite a while. I was very surprised that we went this deep. But yeah, this is how markets are, especially crypto markets and Bitcoin. We shouldn't be surprised about extreme levels of volatility. So yeah, Bitcoin went all the way down to about 30K. And now it is finding support on these green clouds again. So it is trying to establish a dynamic trading range down here. As you can see, this is the move that I wanted to see. This bounce off this green cloud here. This is our confirmation that this trading range is currently being established. And the bottom of it, as you can see, is down here. It is at 34K. So it is possible for price to come back down to the support. It is absolutely possible. It is also possible to continue down. But for this trading range, yeah, bears would have to break this trading range again. So they have to, yeah, they have to bring in a lot of volume. They have to produce a violent move that actually pierces through this support once again. I don't know if they will be able to do that. There is a possibility, of course, especially when the momentum is down like this and the monthly close was down here. So we have strong downside pressure. It is possible that bears will try, at least try, or even succeed in driving this lower at some point, maybe after a quick relief bounce, relief rally, and then down, or they will sell it in this region already. I'm not sure how this will play out, but there are several scenarios I want to talk about today. First of all, yeah, the main takeaway from this chart is we are in this sideways trading range, and price has just reached this local resistance. You can see the resistance clouds over here, the blue and purple ones, and price is currently trying to break into this resistance range. So yeah, we will, our price will meet with resistance very soon. It already has down here, as you can see, but this is just the very beginning. So it could be we will see a retracement from here, especially because this kind of trend we see here, this local uptrend, it looks very weak, and it resembles a rising wedge structure, which is usually not that bullish. However, bulls are also trying to establish this parabolic advance, and this is a very bullish development. So we have to see how this plays out. At the moment, it's not entirely clear, but it doesn't look too bad. So first of all, I would say we're in for more sideways at least. If bulls fail to drive price above the 200-day moving average, which is running through this region here, and get above 42, 43, if they don't manage to do that, I think we will at least see some sideways price action and not a vertical move down like this. This is very unlikely at this point, but we can't rule out anything in a market that is driven by emotions. And this market is very emotional. It is irrational, and we have to be careful because everything is possible. Okay, so yeah, as you can see, if bulls actually manage to break through this resistance zone and push this parabolic move, the structure upwards, it will meet with very strong resistance at 43K, because this is the bottom area. This is the beginning of the bull market barrier range. And as you can see, this bottom was very strong support over here, and it will be very strong resistance over here. So 43.5, 43, something about 43 to 43.6 in this region. This is very, very strong resistance. And on top of that, it is also a gravity zone above the 200-day moving average, which means that if price is rejected here, it can be pulled, it can be dragged back down to a level below the 200-day moving average. This is something we see very often, that price pierces through this resistance, the 200-day, rejects up here and come back down and closes back down. So we see a wick through the 200-day moving average, but not a close above. This is a scenario I'm looking for in case bears, in case bulls manage to drive this parabolic move to that level, and bears take over. So yeah, there's a possibility of this happening. You can watch this on stream, how this develops. Very interesting trading range. Uncertainty, high levels of uncertainty, but also very, very interesting and a good opportunity to learn. The last thing I want to mention on this chart is if bulls actually manage to produce an entire rally here and break resistance, we want to see what happens here at the core, at the bull market barrier. This is currently at 48K. So if we see a rejection at 48, let's draw this. Maybe bulls manage to produce a move like this, which would be very strong, by the way. And they get rejected hard over here, maybe with some kind of double top structure or lower high. This is something we see with a dynamic resistance very often when it is going down. So you see a lower high structure. So this is something to look out for. If you see something like this, it is a huge warning sign. We just had a monthly close below the bull market barrier. And if we see rejection, which is a bearish retest at this level, it could mean we are entering a bear market. So we have to be careful of that. And this area, if you are uncertain, and if you're looking for levels to de-risk your portfolio, this would be the area to look for, in my opinion. If we see a monthly close above the bull market barrier, the things turn rather bullish again, because then we have a failed breakout on the monthly down here. And if price manages to confirm support on this after end of June, it is almost certain. I would say the probabilities are greater than 90% that we will make a new all-time high. But it's a long way to this, and for bulls to actually hold this level once gained. So yeah, we have to look how this plays out. The next chart. This is our dynamic trading range on the 4-hour chart, based on my indicator adaptive range, which you can use freely. It is available on TradingView, and you can add this to your chart anytime. So here you can see these are support and resistance bands. They look like Bollinger bands, but they are not. You can see with the sudden moves, these sharp edges. This is not characteristic for Bollinger bands, but this is my own kind of modification of Bollinger bands to account for short-term volatility a bit better, and to represent proper support and resistance. Bollinger bands don't really represent support and resistance very well. They act as support and resistance, yes, but they are not meant as to be viewed as the boundaries of price action, because price often likes to cross Bollinger bands, and many trading strategies are based on Bollinger band crosses. For example, if price crosses a Bollinger band to the upside, it's a sell signal because most of the candle closes are within the bands. So yeah, this is how Bollinger bands are being used very frequently. And these support and resistance bands are actually bands that we want to see hold as support and resistance, like in this case. You can see price doesn't go below these bands, except for this case, which was the capitulation candle, or this one, which was also a similar capitulation event. So when you see these bands, and they actually converge like they are doing here, in the past days, they did become very narrow trading range over here, and this is called a pressure zone. And you can see on my YouTube channel, you can find a deep dive session on pressure zones. It's long, but it's worth investing your time in because it's very, very valuable knowledge. So if you understand how these pressure zones unfold and what to look for, you can see that this development is very bullish, because what we're seeing here is we're entering a pressure zone, we're coming from a downtrend, and now we have a very, very stable uptrend right here. You can see with this trend line, and you can also draw the parabola. And bulls are pushing these resistance bands to the upside. As you can see, they are turning up, and there's still bullish candles down here, despite having met with resistance at these bands. So this is a bullish sign. Bulls can, if they hold this region over here and don't violate this uptrend, so that it develops into a sideways trend. So if they can keep this uptrend for a while, the bands will start to expand very rapidly, and an uptrend is very much possible. We are already in an uptrend. However, I'm talking about a much stronger uptrend. You can imagine that once we break certain key levels, like this one, for example, a lot of FOMO will be noticeable in the market. Many people will join back in. Yeah, this is how it goes. Okay, so right now this is looking rather good. We want to see bulls defending 38. If they fail to do that, we want to see at least 36.5 maybe. This range should hold. If not, this is a very, very stable sideways range for the time being. It can drag on for a while. I don't know how long, but the more we go sideways here, the more likely it is for price to try at least break lower one more time, and even maybe do so. This is the market flow chart. You can see market flow, COG overlay, and oscillator indicators. These are my indicators as well. You can find them in the public library, and there is an explanation video on YouTube. It's called Thank You Gift, because these indicators are a gift to my community, my supporters. So you should already know what to look for. If not, watch the video and you will know. So as explained in the Thank You Gift video, what we want to see is that price action deviates from the means, from the COGs, to a high degree, which is the case here. You can see with this crash, we actually gained quite a distance to the COGs, which were up here like 43K, and price went down to 31. This is a huge distance. So you can expect this zone to be a very good buying range, because price will eventually come back to the means, and the means will take some time to come back down here, come down here. So what this means is that the probability is very, very high for price to bounce from this area, or somewhere in this area, back to the COGs. And we saw this happen here. Price returned to the COGs, it retraced from there, it got back above, and now it's actually trying to break through. If bulls manage to break through the COGs over here and find support in them, they can create a real uptrend. This is not an uptrend yet, it's just a local uptrend, but bulls have to go to the other side. They have to enter the bullish side of the COGs and ride these bands higher. It is similar to exponential moving averages, for example. But this is an example of how well you can trade these COGs. It's actually very nice. And what we're seeing here is quite good, I would say. This looks like it wants to break above right now. Here's a closer look at the parabolic structure we are in, and bulls are riding this parabola very nicely. I must say I'm impressed by how well they are holding this, given the fact that there is a strong force pressing against price here. This is, I'm explaining this with an analogy. If you're riding a motorcycle, you're entering a corner, a 90 degrees corner with high speed. Yeah, it's almost impossible to prevent crashing into the sides of your the road or even brake off-road. This is something that yeah, bulls are fighting with as well. In this case, they are trying to hold this parabolic structure at all costs. It is not easy because they are pressed against this and they can fall out anytime. They can bears can just need one major push down and this parabolic structure is broken. So they are very they are hanging on just like that here. But the parabola is very characteristic, or it's one of the most important characteristics of a parabola is that bulls are becoming stronger along the way, and that is what we are seeing here. We had this tiny rejection today over here, but bulls are already gathering their strength and trying to pump higher here. We will see, or we will have to see how this plays out. It could reject any time, sure. There is major resistance in this area. I just showed you quite a bit of resistance we are heading to. So yeah, don't be surprised if this breaks down at some point. And then we want to see bulls hold area, confirm support somewhere at these levels. Even if the parabola is broken, bulls have to hold these levels here, 36.5 to 38. This is the region I pointed out earlier as well. So if they can't do this, it's very likely for price to come back all the way down again. Maybe to test these swing lows over here, or even break this low and test this one. This is very likely to happen if bulls fail to hold this region. So watch out for that. On the other hand, of course, bulls can accelerate here. This is a parabola, and you know what parabolas can do. They could really, literally play this like this. It's possible, although I don't expect this to happen. But yeah, we should observe this. You can do this on stream. There are some trend lines in this area, and one of the most bullish things here is, let's look at this trend line. Bulls actually managed to break this downtrend line and are currently confirming support on it, although very weak still, but they are trying to confirm support on it. This is a chance. If they manage to confirm support, they can push higher. And you can see this here as well. There are multiple trend lines running through this region, and yeah, bulls are hanging on quite well at the moment, but I want to see more strength now approaching 40K. This is very important. This is the VWAP chart. Here you can see that we have a monthly VWAP gap at 43.6. Monthly gaps are created when monthly close takes place somewhere far below or far above the VWAP level. So that the VWAP is actually reset to the level of price at monthly close, and you see a jump to the price level all of a sudden with one candle. This is called a VWAP gap, and these VWAP gaps are closed very frequently or filled very frequently by price returning to that level. And as you can see, price is currently on its way, and this is a legit target. We have to watch this level. 44K is a level. 43.5, 44, where we might see a strong rejection because the gap is filled, or gets filled. This monthly gap gets filled. If we get there, watch out for sudden rejections, especially considering this swing high over here. As you can see, we have this wick down, and this is a very huge level. It is at 44.6. This region is very strong resistance. So if we get to this level, watch out. Maybe this is worth shorting as well. Although it's risky shorting into a relief bounce. I don't know if this is a relief bounce, but yeah, it's certainly with a good risk management, it's possible to short this area. Yeah, keep an eye on that. So this is the Fibonacci Bollinger Band chart, and you can see on this chart, I make this a little bit easier to read here. These bands are strong support and resistance, but they are also representing market flow. As you can see, these are still going up. They are trying to go sideways now because this crash has led to the market flow to go more sideways than up. However, we are still in this uptrend. And if bulls manage to push through into this range over here, for example, this big gap, these bands can maintain their uptrend and the market flow will still go upwards. This is a good sign for possible continuation in the short and midterm. What we want to look for right now is, let me have a look. These bands over here, as you can see, they are kind of a center of gravity. Price has been circling around them for a while. They also act as support and resistance, but not strong ones. It's just more of a lower time frame support and resistance. But as you can see, the outer bands here, over here, and here, these are the trading range defining Fibonacci Bollinger Bands over here. Fibonacci Bollinger Bands are also a very, very nice tool to find channels before they even exist. If you draw trend lines and find channels this way, it is always a bit late because you can see channels before they even exist, and Fibonacci Bollinger Bands help in discovering them early. So if price would actually go to this upper band here, which acted as support and resistance, and rejects here, people will start looking at this parallel channel here. They will draw a trend line here and draw it down here, and you can see that this will be a channel they will look at. So this tool actually helps you to see them early. What we want to see here is that price gains this band. This is 38.9. We want to see major candle closes above, preferably daily or even higher, and to confirm support and bounce. This is what we want to see here, because this is a very, very important band. As you can see, price rejected at this, or has been rejecting at this for almost one entire day. These are 6-hour candles. And yeah, it was strong resistance and support, and it actually was a battle zone over here. So if bulls win this level, they can drive price higher. This swing high, this swing high won't be much of a problem anymore because they have support directly at the swing high through by finding or by confirming support on this Fibonacci Bollinger Band over here. If you want to know the exact settings for these and which indicator I'm using, you can join Discord and ask me this. You can replicate most of my charts except the ones for Cloudy. Okay, this is my cycle Fib chart. Here you can see the most important static Fibonacci levels in Bitcoin right now. You can see where these levels come from over here. This is the same as on stream, and you can see we tested this 1618 for the second time. We already got a test over here. So this is actually a retest, and retests are not that reliable. So it could be this gets broken at some point because it is tested already. We have to be careful of that. But nevertheless, I mean, this reaction is pretty strong and it is promising. So if bulls can keep up the pressure to the upside, make a new high, and preferably gain this 42.4 level, as you can see here, which was the resistance of this. I don't call this shoulder, it's swing high, but here you can see it was resistance over here. The price rejected at this level, found support, and the 1618 went higher and confirmed support at this level. So if bulls manage to break this, this is a very important level. If bulls manage to break this, get above, confirm support, this is a very, very good and bullish sign. But if they reject here, people will, Twitter and YouTube will be packed with head and shoulder videos and charts like this. And let me tell you one thing, this is not a head and shoulder. There are criteria you have to look at. When you want to identify head and shoulders, there are criteria that are very important to look at. For example, a high volume in this range. This is a very important criterion. Why? Because a head and shoulder is nothing else than distribution. And if this is a head and shoulder, it means that this entire thing is distribution and we can expect a move down. This is what a head and shoulder is. But is this really the case? Are we still in distribution over here? Or was this the part of distribution? This is the primary question. Is this the distribution, or maybe this? Or is this entire thing distribution? If this is the case, we can expect 10K. But how likely is that? So I'm not of the opinion that this is a head and shoulder, because I don't think we are in distribution anymore. Even if price was to reject here, and it would start to look like a head and shoulder, I still don't think it is one, because we didn't see the biggest volume over here. And for a head and shoulder, we want to see the biggest volume at the head. Why? Because it means the big players are unloading their positions. They are selling into a high FOMO buying pressure, and they are selling big positions, shorting maybe. Yeah, and this is creating a high levels of volume, and we didn't have this here. This is not super high volume. We have much more volume in this area right now, and we had very strong volume over here as well, but not at the head. And this is a sign that we might not be in a head and shoulder. Also, this is it's too big for a head and shoulder. This is not a typical head. What you want to see is you see a shoulder, a retracement, up, rejection at higher resistance. We're losing support, retesting from below and continuing down. This is what a head and shoulder is. But this is you can consider this to be a unique sequence. I mean, yes, it was Wyckoff distribution over here. Yes, however, this is not a typical head, because it's not one test of resistance. It is more like a ladder. It's laddering higher into resistance here, testing down here, bouncing, then falling back down. This is not typical for head and shoulders. So I don't think this is the case here. This is why I'm very relaxed, and I still don't think we will see 90% decline. So look at this. If this was a head and shoulder, we had a target like this at least. And how likely is it for price in Bitcoin in a bull run to correct 72%? I mean, it's possible. It's possible. But the probabilities are not that high. So yeah, we had a very, very big correction in 2013. I know that, but we had a blow off top before, and we didn't have this here. So this is a major difference. There was no euphoria here. So there's not euphoria to crush. When you see a 70-80% correction, you're crushing euphoria. You're turning that into desperation. This is what a correction means. But you don't have to crush anything here, because there is nothing to crush here. We had some greed, yes, there was some greed, but there was some doubt also. People were doubtful that Bitcoin would go higher, so they expected this move. When people start expecting corrections, it's not a euphoria. Instead they would want to expect higher all the time. Even if it crashes down 60%, they are calling for all-time highs. This is what euphoria is. This is what complacency is. We don't have that. So looking at the market cap charts here, you can see that altcoins are currently fighting with the 1 trillion mark over here. If they get back above and confirm support on it and bounce, it's actually a pretty good sign that we will see higher prices on alts. However, as you can see, the total market cap is currently at a very crucial resistance over here and at risk of rejection here. So we need to get back above this, confirm support, and approach the 2 trillion mark. This is a very, very tough region. And yeah, we will see live on stream how this is played. for now, there is high risk of rejection at Bitcoin, at altcoins. Here, this can be a failed breakout, for example, like this. As you can see, it's already rejecting a little bit. So this could turn out a failed breakout. This could reject here, and this could end up, yeah, at least in a downswing. So Bitcoin, yeah, is at risk, certainly. So bulls have to push through. Here's a low time frame view on the parabola. It's actually very clean. Maybe I can adjust this now a little bit like this. As you can see, this is more precise. Yeah, it's actually played very well. What we want to see here is follow through this resistance. We want to see bulls push through this. If they manage to do this, it's a good sign. As you can see, we had on algo here, which is my technical strength indicator, it's actually looking at 16 different indicators. And you can see we had a very bearish technical score over here. We had this tiny pullback to support, and now it's grinding up again. It's actually a good sign, and score has returned to a neutral level. We saw the exact same thing happen over here. We had this bearish score, we had a pullback to support, and then a bounce. Now we want to see a similar bounce. We want to see an even stronger bounce, because in a parabola we want to see bulls becoming stronger and not weaker. This is very important. Yeah, this is the swing high resistance we're looking at the moment. We just got one rejection. If we approach this, we can see some kind of mini cup and handle here, for example, like this. Up here, rejection, and then handle, and then up. This is something that we see very often in parabolas, cup and handles. Look at this. This is also some kind of cup and handle. Yeah, this pattern, a cup and handle pattern, comes very often together with parabolas on the lower time frames. Looking at cloudy here, this is low time frame cloudy. You can see we are in a pressure zone. Price is kind of trying to wiggly, doing this kind of sideways move through this cave. Here we have resistance clouds, we have support clouds. Now, in a pressure zone, the question is, who's stronger, bulls or bears? At the moment, it looks like bulls are still stronger. However, this is the core resistance, and we want to see follow through. We see rejection here and then a bounce, and we're still sideways. So this pressure zone is actually kind of a risk factor, because it forces price into a sideways range, and the sideways range acts against the parabola. So the longer Bitcoin goes sideways here, the more danger to the parabolic structure. And once that is broken, we will see a down move. So what we want to see is continuation up and not resting here for too long. Yeah, we just got a fill of this, or a retest of this point of control from back here, a tiny retracement. Now we're in this approach to this cup and handle. Volume is declining a little bit on this one, but it is still very high. So yeah, this trend can certainly continue from here. It's nothing telling us that this will come to an end early. There might be some low time frame bearish divergence. We have hidden bearish divergence at the moment, even on the medium time frames. But this is normal, because we just had a major down move, and it is very difficult for bulls to invalidate the hidden bearish divergence. Now, yeah, I will put this chart on stream when it makes a little more sense. At the moment, this is not necessary. Yeah, this is it for today. I think the situation is pretty clear. So yes, a downside continuation is possible, but for now, bulls are in control. We want to see 40K, 41, and especially 43 to 42, 43K to be broken by bulls, to be confirmed as support, and then we can see an approach on 45 and 48. This is the key region where the battle of the bull market will probably take place at some point. Yeah, it's truly the battle of the bull market, because if bulls fail at this spot and get rejected, there is a high risk of entering a bear market. However, looking at the macro chart, maybe this is something that we can do quickly. Let's look at the monthly chart. I mean, we just had a monthly close. So here you can see This is the bull market barrier together with the 200-day moving average. We have closed the monthly candle below. So bulls need to close this monthly candle above this red line, this 48K. This would mean, if bulls defend this in July, that it will continue up, probably in a very sharp V shape. However, this is not yet certain. So there is a risk coming back up here and getting rejected and continuing down. This is a possibility. At the moment, it is very difficult to tell which scenario is more likely, because we have to see how strong bulls are in this rally now. At the moment, they are trying to become stronger, but they are not strong yet. They have to crush resistance first to show their strength. And they didn't do that yet. They are still ranging down there in the bearish region. So they have to go at least above the 200-day moving average and 42K. This is very, very important. If they can't do this and get rejected early, we will probably see another wick down, maybe with a higher low, lower low. I'm not sure. This could go all the way down. Rejection at resistance over here could send a price lower. And looking at this chart, I mean, it's pretty clear that this bull run is not comparable to this and this. It is a unique bull run we're in. This is unique. We have never seen a similar structure. Let me tell you a few things about the structure. Let's get rid of this. Okay, the first thing is 2015 to 17 was a textbook parabola. It was a textbook parabola. Beautiful. It's what we are seeing right now on the lower time frames. Then we had a break into what we call a bear market, but actually what it is just sideways. It's just a sideways continuation pattern. And yeah, this is what we call a bear market, by the way. So this is a textbook parabola. This market here was special because it was a very steep parabola. It was so steep that we had a blow-off top over here, blow-off top. We fell into a mini bear market over here, mini bear market because when you look at the price range, it's minus 78%. It's a huge correction, absolutely huge. But it took 1, 2, 3, 4, 5, 6 months to recover, half a year to recover. And we saw this. In this case, we don't have a parabola and we don't have a super sharp trend. What we have is just basically a linear growth here. And the second thing is we had, as you can see, when we draw this trend line and this trend line, we have this very weird acceleration here. Very weird acceleration. I mean, this was expected because it was the pressure zone from the bull market barrier here and the log trend, which is running like this. Okay, I can't draw like this. So it was a pressure zone and it broke out to the upside, which is the expected outcome. I talked about this in mid last year. However, when you look at the structure, it doesn't look healthy because it was too steep. This incline was too steep. It was not sustainable. We want to see something like this for a long-term bull market, or we want to see, yeah, a trend, correction, trend continuation. Now what we're looking at is trend, correction, and we want to see continuation. Yes. And in this case, it is more likely to happen than in this case because we had a blow-off top here. We don't have a blow-off top here. So this trend here is actually more likely to go further up than this one. We did back here. We will probably do this here also. I'm still bullish. I'm still bullish. As long as we don't have two monthly candle closes below the bull market barrier, turn it back on here. As long as we don't have two monthly closes below and significant bear strength to the downside here, crushing into the lower 20Ks maybe, I'm still positive that this can recover fast, especially looking at this wick here of this multi-candle. This is when we see something like this, it tells us there is strength. There's something happening here on the bull side. Yeah, I mean, the situation in general is rather uncertain, and there are times when it is much easier to talk about scenarios, and there are times when it is actually very difficult to talk about scenarios. Right now, there are some. I mean, I just talked about the scenarios I'm looking at, but I try to not look into the future too far. I mean, look. It doesn't make sense to think about what will happen in 3 months, because it all depends on the next weekly and monthly closes. This situation can change within days and weeks. So it doesn't make sense to do some mid and long-term projection right now. What I want to see is bulls getting above the 40Ks, preferably getting above 48. If this happens, my bullishness is confirmed. If it doesn't happen, I'm still neutral to bearish. We might see further down. We might see sideways chop. Everything is possible. We will have to see how strong the 30Ks are in terms of midterm support. If it can hold price up, if the 30K or 33K levels can sustain multiple retests, yeah, it's possible, but we don't know yet. So let's watch this together on stream, and you get my thoughts on the charts written down in tiny notes, like always. So yeah, I hope this was interesting, and I think I will do the next update as a live stream. It's better to talk to you than to talk for myself, by myself. This is not something I like to do. It's actually pretty boring. Yeah, and I like to do live streams more, so let's try this out next time. Thank you for watching, and see you on stream and on Discord.